Hello and welcome to another episode of Casual Friday. As always, we're brought to you by FTX. They give us money to do this stuff. That's very nice of them, but it also helps for you to show them that we're not totally useless. So there are links available in the description below if you want to click on them, if you want to sign up. If you will sign up to the leverage stuff, we've got a leverage guide in there for free as well. So when you get liquidated, you can at least blame yourself and not a lack of knowledge. And also a mobile app, which we strongly recommend. That's got no leverage on it and all sorts of asset swaps, portfolio tracking, lots of stuff going on in that ecosystem. They're like one of the few entities, it seems, in the space that have money left so far. So nice to be partnered with them, long-time supporters of the show. Click links, make it seem like we're relevant, and would very much appreciate that. Don isn't here. Don has a real life, one that he's discovered during the course of this bear market. So he's off doing something, as normal people would, because it's, Friday evening in Europe. So I've recruited Trader Mayne here to come chat to us about price action stuff, and the list ends there because 5 years later, or after 10 years of doing this stuff, he's still very much fixated on his rectangles and line make boing. But he is a returning guest and filling in for DonAlt, so thank you for doing this. How are things? How's life?
I'm doing good, man. Wish I was kind of living that DonAlt dream life in the bear market where you go get a girlfriend and you go outside and you do fun things. But here I am drawing rectangles on a box. My chart colors have changed over the years, but that's about it. Still doing the same old shit.
That's some real character development there, right? When your chart layout changes, you're like a new man, basically. It's like a form of trading puberty, I feel like.
Yeah. It's like leveling up in anime. You get the new drip, you get the new fit, it's new chart colors.
Yeah, breaks all the power scaling, but that's fine. We'll deal with that later.
Absolutely.
That actually does raise an interesting point before we even get into like what does the market look like and why is everyone panicking or very excited depending on the time frame you look at, right? But like crypto Twitter, and we sort of came up together to some extent as far as social media, whatever interaction stuff. And in terms of what qualifies as sophisticated quote unquote trading, that's changed a lot, right? Like I remember even in 2017, if you were drawing horizontal price levels and support resistance as opposed to like chart patterns, that was already pretty sophisticated, right? It's like, oh shit, this forex style, levels trading, this is some next level thing. Whereas now it's criticized more than anything. It's seen as pedestrian. Everyone looks at a ton of futures data now, and everyone's a quant and all this other stuff. You seem fairly resolute in your approach and your commitment, and sort of still, from what I can tell, very much price action oriented, or if not almost exclusively. So has there been any kind of changes or development from in terms of at least your toolkit given the 5-6 years?
I might have even regressed to even less complicated stuff. Because I mean, we've all gone through it. Like you said, we came around at the same time, and there was always like a flavor of the month, right? There was Ichimoku clouds for a while.
You're
Then everyone
welcome.
was doing RSI. Yes, thank you for the guide. Then there was RSI, and there was so many different styles. And you and I and DonAlt and a few others kind of were like, hey, I like these horizontal lines, and they're nice and clean. And I do think trading has gotten a lot more sophisticated in crypto, just partly in fact due to the tools that are now available. Things like heat maps and Sierra charts. There's stuff that just wasn't available 4 or 5 years ago that is available now. High level tools that you would see in traditional markets that are absolutely, I think, valuable, now are available to be used on crypto markets. I personally still do the same old things because it works for me. I learned a long time ago in trading that you need to, I think it's Bruce Lee, right? I'm not worried about the guy who's tried 10,000 kicks. I'm worried about the guy who's tried, one kick 10,000 times.
Yeah, it's
I
Kevin
feel like,
Pham actually.
sorry, you're right. Bruce who? But it's so true, right? I mean, if you're trying to learn a sport or a skill, to me, it's very important that you have certain things that aren't variable in your system. And for me, that was okay. I'm doing price action. And if I'm going to collect data and build a system, certain things need to be the same. And it's just worked for me over the years. And as the markets developed and changed, it still worked. The markets still move the same way, in my opinion, as they did, kind of all those years ago. There might be a new 100 different ways to look at it. You can have all of these different tools and indicators and things like that. And if that's what works for you, absolutely go for it. But find something that works and then stick with it long enough to find out, and actually build an affinity for it, as opposed to saying, okay, well, this guy's really hot right now and he's been using heat maps, so I need to learn to use heat
Yeah.
maps. If you talk to like Abe Trader or like some of these guys, I can't even understand their charts. right? But when they want along, I seem to want along as well. So that's kind of enough confluence for me.
Yeah, I think there are two important points to come from that. One is, even if you're following other systems, you and I have been down the price action rabbit hole as far as pretty much everything, right? Like whatever name or whatever system you want to come up with. And then we've also been privy to, as you mentioned, sort of more quote unquote sophisticated systems that generate levels, be it profile, market profile, footprint, pivots, whatever. It's like more or less we're still looking at the same charts, and you always end up in the same neighborhood, right? It's like the levels more or less end up being the same, and you can kind of, even from that, tell quite clearly the edge isn't going to come from like, oh, I drew this level like this and this guy got this level from here and now he's profitable and I'm not. Like, that's very rarely going to be the distinguishing factor. And I think I quite like the second point you made about, you know what it reminds me of, the shiny new thing type of object, but we've seen so many traders like literally completely flip their system month on month depending on what's popular. And if you needed more proof that there wasn't a system in the first place, that's about, that's about as good as it gets. But it reminds me of like program hopping if you're trying to get strong or build muscle, right? Like you get a program, like it's fine, it works, like a bread and butter type of thing. You stick to it for like a few months, you should see progress. You do like 2 weeks, and then you go on YouTube or TikTok or wherever the Zoomers go, and you see your favorite influencer using some other program, a completely different split, rep range, exercise intensity technique, whatever it may be, and you're like, oh no, that's how I do it, and that's the only reason I'm not, achieving whatever fitness goals I have. And so they just hop and hop and hop from program to program to program, or in this case from, trading style to trading style, never end up really learning anything or committing to anything. Like, I've been doing the levels thing for like 5 years, and I still feel like I'm figuring out new shit, new nuances, new details, making my system better. So even if the levels kind of on their face, and they seem like pretty simple, like drawing it isn't the trading part of it, right? It doesn't do your trade identification, your trade management, risk management, and setups and all that type of stuff. Like, like seeing it is one thing, but I feel like mastery is another thing entirely, and we're still very much, students of the game, I think is fair to say.
Absolutely. I always tell people this. I'm like, the TA part to me is easy, right? It's what do you do when price gets there? Right? Everyone, you can have 10 different ways to be like, okay, there's liquidity. Somebody's got some heat map. He's like, oh, look, there's a bunch of stops under this low, and that's why we're going to go there. And I'm like, oh, that makes sense. That's last monthly's low. That's a level I'm paying attention to. Two, okay, we've got the same level, but what do you do when price gets there? Do you buy? Do you sell? Do you wait to see how it reacts? That's kind of the difficult part. It's not so much finding out, where the key levels of interest may be. I find that's actually quite easy. It's very visual for at least how we trade. It's like, this seems like a level that, price likes to interact with.
Stuff happened here
on my chart. Yeah. But then what do you do when price gets there, and how do you actually turn that, price getting to that level into an actual trade idea? Okay, is there a reason for me to be entering a trade here? If so, how can I define my risk? How am I going to actually get involved? Where am I going to target? That's the more nuanced.
Yeah. How good is the setup? How do I size it?
Yeah.
Well, what do I do 1, 2, 4, 8 hours later if it's moved this much or hasn't moved at all? Yeah. I mean, it's just like, it's such a base level thing, and the actual edge is going to come from the trader, as always, and how they build the system around it. But I think still in these markets, and funnily enough, as we'll talk about, even in the S&P and sort of legacy markets, like largely sort of simple, straightforward, high time frame, line make boing stuff. Again, that's not a trading system in itself, but in terms of giving you areas to do business or to prioritize some prices over others, it still has that type of effect, which is nice to see. We could take a look at some markets here. It's been a while since we've chatted in this type of capacity for sure. And I've got the month. You can screen share as well, as you know. I've got the monthly chart open right now, and it just seems like ever since we had this crazy move from the 30 to 20k move, basically, where the industry went to zero. Not much has happened since then, right? We have one monthly green candle to write home about, at least on Bitcoin, that went to 24, 25. And that itself, as you'll recall, was a huge disappointment, right? Because at the time, equities had their face melting rally up to 42, 4300 in the S&P, etc., etc., and Bitcoin kind of just went from 20k to 25k, which is a complete nothing burger. And here we are back at 19.3 or 19.7 being I think the Jim Talbot sort of troll level, or 19,000, whatever. But the market's it's just kind of stuck at 20k, right? And even if you look on the weekly, it's the same thing ever since that final kind of large outsized move from high 20s to sub 20, more or less in this, since that point, since June, and it's October now, almost, pretty much to the day, the market hasn't really gone anywhere, right? So I kind of want to get a high time frame, maybe sort of monthly, weekly, before we get more in the weeds in terms of levels. Like, I mean, what do you think is going on here?
So, I mean, I've said this for a while now, and I still agree with it. Like, the fact that we're kind of proving 20K is a level of interest, like I think that's a good thing. Does that mean we can, like, we're not going below? Of course not. I do still think that there's a chance that we trade below. Looking at the monthly, I think the most obvious level to everyone, 20K being the monthly wick, right? Well, where's that monthly candle close? And it's
Show it to
around
us.
13. Oh, here. Yeah, I'm drawing levels on my chart and no one can see. Perfect. Okay, let's see here.
Oh
Ta-da.
God, what's that? No, it's fine. It's your child. Don't worry about it.
Okay, so
Got the Akatsuki background, as I can see.
of
Respect. A
course,
real
of
recognize
course.
real.
Is it sharing now? You can see?
Yeah, all good.
Okay,
Take us
beautiful.
through it.
So we have that previous all-time high, right? So that level I think everyone had on their chart. And like you said before, high time frame level make bulling. If you would have bought at or around that level on that first dump, that caught the biggest move, right? And it seems very simple. It's like, oh, all I had to do was buy here. Seems like an obvious level. This is only half the battle, right? Just because we came here, well, what are you doing when we trade below it like this, right? What are you doing when we trade below it like this? So actually getting into a trade at this 20K level to experience this upside would have required, your system. You got to go on a lower time frame, etc. But in terms of seeing this level be respected, I think that's a good thing. Obviously, what you don't like to see now is last month's candle closing below, this current month's candle trading below, and actually potentially having this as resistance. And I think the most obvious level is here. So I think you have to look at it as kind of two ranges. I'll do the SZ range levels, right? His little double arrow. I think this is a very legitimate range for Bitcoin, on the high time frame. If we stay below this level, I think it increases the likelihood that we trade down to this level. That's as simple as I'm playing it kind of on this high time frame. And I would draw another level now up into here and then into these highs as well. And I kind of have the same idea based on the monthly chart, right? So obviously a lot can happen on the low time frame. These are very big ranges, but I do think these are kind of your key areas of interest here on Bitcoin. If we're able to get back above kind of, 23 to 24K, sure, maybe we have a chance to go back into these lows. But as long as we're trading below this 20K level, I do think it increases the likelihood that we have another move down. But I think this is value here. As an investor, I think this area is value. So you have to kind of define for yourself, what are you, right? I think a lot of people who watch your channel, watch my channel, I do think they like to at least think of themselves as traders. So, buying 20K maybe is not a great trade right now, but investing between 13 and 20K, I think that's a different conversation. So it's all about what is your time horizon and what are you trying to do. I think if you're a trader, you're just looking for levels of interest where you can frame a trade idea around. There's lots of those. I think you have to go lower than the monthly to get into some potential long ideas here, because that next monthly support is quite low.
Yep.
But if you're a trader based on the monthly, I mean, listen, if we reclaim 20, I don't know why you don't get bullish for at least a move up. But I think this is value long term. Like personally, I think a little lower is possible as well, 10 to 20K. And I know it sounds like a huge fucking range. And everyone's gonna be like, Trader Mayne, that box is 50%. Fuck you. Well, guess what? Buying between 3 and 6K
Right, exactly.
was a really good buy last time. And buying between $100 and $200 Ethereum was a really good buy last time. And I think long term, if you believe there will be another cycle, which if you don't believe there's going to be one, why are you watching this anyways? Go get a job. I think you're going to look pretty smart in how long? I don't know. That's the one thing that I'm having a lot more difficult time kind of putting my finger on, just
Yeah,
because of the
time.
dreaded macro is time. We have experienced lengthening cycles over the last two bull runs. I think we're 400 days into this one. If you're looking at the last bull run, I think it was like 1,000 days before bottom to new all-time
New
high.
all-time high, yeah.
That's a long time, right? If you just use the halvening metric, which is May 2024, generally we've seen a bull run start after each of the last halvenings. That's still a long time from now. So what do you do between then? But if your time horizon is 12, 24, 36 months, I think buying between 10, 20K Bitcoin is pretty good value. I think from a trading perspective, I would go down one more time frame here. I would look at the weekly. And I would kind of be saying, okay, I obviously have this key 20K level here, but I actually think 19K has proven to be support, right? 19K is the new 6K, which means inevitably it's going to eventually collapse and we're all going to go
50%
broke.
haircut, yeah.
But 5 out of the first 6 times, 6K was a really good buy. So
And the
we've
one time it
obviously
wasn't, you gave back all your gains from getting the 1%
exactly,
moves
but
off
we
of
don't
it.
worry about that. We don't worry about that.
That was a level for a year, isn't that mad? If you think about it contextually, it's like, oh, 6K is 20K is the new 6K, and I think the longer we spend here without doing anything, unfortunately, that argument becomes more credible. But like some of the,
Yeah.
especially some of the fresh or initial bounces of 6K were proper mad, before it
Yeah, I
became
mean,
like a
listen, the
1% range.
first one was 100%. This one was
Yeah.
like 80%, 60%. I wish we had this kind of action. To me, unfortunately, or fortunately, I guess, it feels like we're more like here. Like I feel like, or maybe here, just very little volatility, right? And any sort of move up gets snuffed out almost immediately. Whereas at least here we had those multi-week rallies where altcoins went up and everyone was happy. And there was even like a sniff of a potential reversal. Obviously, it never ended up
Yeah, we
coming
kept giving
true.
Don entries. That was the
Yeah,
issue.
and DonAlt, and I shorted a couple of these lower highs too. But DonAlt, every time, no, we're not going to new all-time high. No, we're not going to new all-time high. No, we're not going to new all-time high. But there was hope here. The one thing that I've hated about where we're at right now is outside of this kind of first rally we talked about, it's kind of been just dismal.
Yeah.
Like there's been no sustained strength whatsoever where we even have some sort of like, okay, I can go on the daily chart and I can see like a trend. Like here, at least you're like, okay, for multiple days or
Yes.
weeks, excuse me, this was an uptrend. That means I can go look at some altcoins. I can actually look to buy the dip and have some hope that we might, continue going higher. But this move was completely reversed right away. This has just been god awful. I picked the perfect time to come to Europe because I left and we were at 19.3K. I came back, we're at 19.3K.
Yeah.
So as a trader, this is not the most fun environment. And unless you have some sort of edge in this type of price action, unless you're like a trader, a trader SZ, and you are an absolute beast, level to level, low time frame. He's able to find a range on any time frame and find, a range trade. I think the DonAlt methodology is the smartest one. Go look at his feed and how many charts has he really posted, right? He's like, okay, this seems like a good level. I'm going to buy here and wait, right? This seems like a good time to sell. And turns out it was the absolute top and then everything collapsed as soon as
Dumped
he
on
sold.
us. Yeah, rude.
Yeah. So, and this guy's managed to get a girlfriend, go skydiving, and do all sorts of fun stuff. Well, I'm sitting here being like, okay, well, I got a 1 hour order block here, and it might give me a 2% move to the upside. That then literally, what was the sentiment on Twitter yesterday? Oh my God, look at this rally. We've retraced half of it already. People are already now talking about a nuke. Like, this is just not a fun environment to trade, in my opinion. I'm still going to do it. Don't get me wrong. But I think for most people, there's other markets and there's just better stuff you can be doing with your time right now than trying to trade this. I do genuinely believe this is chop. I don't know how you can look at this and be like, oh no, this is really clean, fun PA to trade. I disagree. Anytime you see your moves completely retrace almost instantly, generally, this is not fun, tradable PA.
Yeah.
That being said, if you're looking for reasons to get long right now, based on this move yesterday, I think the most obvious answer is we've taken out every low here except for June's low, right? So this is the only remaining low that has not been run on Bitcoin. Stocks, on the other hand, were already trading below June's low. We got above it again yesterday. We're back below it, right? So you have to ask yourself, is Bitcoin stronger than equities right now? Or is Bitcoin just lagging and we're eventually going to be trading below June's low? I'm pretty confident that we trade below this level in the future. Question is, do we get a rally first? What I would love to see is something like this. Maybe some sort of rally going into midterms, maybe a bullish second half of so much for October. But, maybe a bullish second half of this month, end the year on kind of a decent high note before new lows. But I do ultimately think we trade below June's low. But I don't
See
know,
who's
man.
hanging
Like,
out below there. Yeah. And thing is, even the point you made about like low time frame scalper maestro type of things. Like, first of all, the rotations themselves have been getting smaller, so your edge most likely on average for most people, like there's less room to capture, less room for error. The rotations again themselves are smaller size, so you're gonna need to be more precise, and or just your edge gets eroded by that, right? So that's like a very tricky thing to do. And also one thing which Don and I have discussed, I'd be curious to get your thoughts. Like, contextually, we've been testing this sort of 19k whatever range, however you want to line it up, and also however you want to count. It's like the 10th test or the 8th test or the 6th test. I think I've got the exact same level you've got there, pretty much 19 flat from that lowest close, like in June or whatever. Like, the more time you, generally speaking, the whole bouncy ball meme that you like to tweet about, right? So the
yeah.
more you test the level, typically if you don't go anywhere, the reactions get weaker until it eventually breaks. So that if you've been kind of punting home a mean reversion setup, where it's like fade, print, fade, print, fade,
Yeah.
print, fade, print. The issue is the one time you're wrong, if you're like, you're not going to get filled out where you think you'll get filled out, right? Or where your
No,
previous
you're really
setups,
wrong.
you're going to be really wrong and give back like a large amount of the picking up pennies in front of a steamroller trades that you've been taking. So it's almost like the cost of being wrong goes up with every single test as the rotations get smaller, and as the likelihood of a high vol move against you in any case also moves up. So even that argument, do you see a strong kind of technical case for rebuying sort of 19 or doing business at this range low? Because my thesis has been, look, I either want to see it obviously break down then reclaim, or get the hell out of this price zone. Because at this
I mean,
point, I can't reasonably be expected. 8th test, best test wasn't in my horizontal video line. That's me fudding the
yeah.
bottom maybe, but I don't know, man.
Yeah, I mean, listen, we have a very janky descending triangle here, right? And that's how price bottomed, or that's how price puked back here as well, right? It was like that descending triangle that everyone's like, oh no, don't worry, this time it's going to break up. It does not break up. 6K floor, right? How many tests was it? Each bounce getting subsequently weaker, right?
Look how
Just like
long
you
that
said,
was, man. Oh my god.
I know. At least we had some time here, and these, like we said, significant bounces. At least this just feels like it's been 3 months of just bullshit. But I agree with you. I mean, listen, just yesterday, for example, like if you caught, okay, we ran last month's low. If you caught this long and you were not very quick to TP, like literally the same day, within 12 hours of entering, you're getting out, you've given back half the move already.
Yeah.
Right. So, like you said, those rotations are happening very quick. Same thing here. Oh, is this the start of a new rally? 3 days later, it's fully retraced. Right. So, if you're not very quick to get out of these mean reversion plays off of 19K, and like you said, even quicker, right? At least that first bounce took some time. This one was even less time. If this fully retraces, yikes. So I do agree with you. I think the way to get bullish here is let's make like a structural new high, right? That would be kind of the reason to get bullish on any sort of buys around this 19K area here is like, let's get above here maybe
Isn't it mad that
before.
that price level is 20k? I mean, Don and I have written about this. It's like, we're not asking for a lot. Could we turn this generational cycle high level from resistance to support? It doesn't seem like a terribly high bar to set. At least it shouldn't be,
No.
but apparently it is. I mean, the top high of the day came in at like 20k, right? I mean, what are we doing
Yeah.
here?
No, exactly. And I mean, if you just want to be super simple about it, like I think, yeah, getting above the previous all-time high level, like if you just draw this out, like I want to be trading above here consistently for any sort of sustained rally. So I've seen a few people like post some crazy charts yesterday being like, oh, we're going to, mid 20s, we're going to 30 or whatever. I do think it's very possible that we have some sort of retest of like this floor,
How have we
right?
not
The
done
point
that
of
yet? Isn't
breakdown,
that mad?
which is crazy to me that we haven't. I completely
Yeah.
agree. Like how this seems like the most obvious like bearish retest area of all time.
Oh, it's so obvious
Um,
it won't happen. One of my least favorite things that people say about
yeah.
levels.
Yeah, but like I feel like I feel like yeah, this seems like this would be the epic bear market rally, right?
Yeah.
Where everyone gets sucked in. Oh my God, we're almost back above 30K, and then you really dump it back off again. But we definitely need to get above 20K and hold. Like I think 19 to 20K between those two levels, I don't think there's really any reason to trade. Above 20K, maybe 20.5, and it shows some strength, then maybe, there is a reason to hope for some sort of rally a little bit higher. It just seems like bears have had, free lunch this entire time, right? There's been not even a sniff of any of these previous highs getting challenged.
Yeah.
So I don't know. I kind of agree with you. It's like how are we not getting above these kind of highs here? I like that 20,500 level, I think, which is just kind of this cluster of highs here, I
Yeah.
guess,
I
right?
like that as well. Yeah. Yeah. Yeah.
Get above here, absolutely. I don't see why you don't target like at least a move above this high. Like at least, like
That's
come
what
on.
we're that's what we've become, right? It's like, please get above 20k so I can long you to 22 and then close everything and never enter the market again. You know, it's like a very
Yeah.
we went from super cycle to this. It's like a very sad indictment on the type
Well,
of price action
initially I
we have
was
to
kind
deal
of
with.
excited of the range, right? Like at first I was like, oh, we have like a pretty nice range forming here to trade. And maybe we're going to get, multiple like range lows to range high trades, but we've kind of just, the volatility is just kind of disappeared,
Yeah.
right? And it's kind of sad. And I do think, I can't remember if it was Light who made a tweet or GCR, one of those people who's really good at saying things kind of ambiguously and they almost sound poetic. But there's the bear market in terms of price dropping, and then
Light,
there's
yeah.
the bear market of lack of volatility and just boredom. And I think we're definitely in some serious boredom phase here right now.
We get both, right? We get the shitty price and the shitty vol. Like, it's perfect. It's you'll own nothing and youll be happy.
Christmas
Yeah,
is coming soon. Don't worry.
I know. That's why I've got my hat on for like 4
Bugs in your
years now.
stockings.
I mean, that seems right to me. I think most people kind of at this point have more or less the same levels, and they're not asking for a lot to just get above 20k, make some sort of daily or intraday high, do something. And the market's been reluctant to provide that. Like, even if you had to ignore pretty much everything we've said, which would be to your great detriment, you could just go back to like the first thing, which is get that 20k level on your chart, and as long as that's resistance, you have nothing to be terribly excited about, right? So if that changes, I'm sure you'll be the first to be beating the bull drum, saying, oh, look, market structure's broken, this is the block or structure that caused it, you can buy a pullback, look for a low time frame setup, all that type of stuff. But that evidence just isn't available at the moment, and I guess we're patiently waiting.
I mean,
do you want to
what
add
day
some
is
color
it?
to that, by the way?
It's Friday right now, right?
It is,
So
yes.
going into the weekend, I don't know. I don't generally like to trade the weekend. Some people are like, oh, the trad markets are closed. Now it's crypto's time to shine. That's
Hasn't
almost
been, right?
never the case.
Yeah.
We actually want the trad markets to be open and we want them to be going up for crypto to just have any hope of anything.
So what's
We
this
actually
Coke
had
box you've got?
this box here.
Yes. What does it mean?
So-
Where does it come from? What do you want to see? Maybe this can be a good opportunity to talk about like your sort of top-down system to some extent, where you, as far as I'm aware, you get your high time frame levels, and you kind of make them more granular until you get onto an entry time frame, which is lower, and then you'll look for specific patterns within that, right?
Let me just show my newest YouTube video. I had my editor go through like a bunch of my previous streams because I'm not like you in that, I consider your course, like your YouTube videos, like a university level course in terms of preparation.
Way too kind.
And it's amazing. And I recommend them to everyone. I'm like, this guy has PowerPoints, right? He has examples that he's pulled up in advance, right? And he's got explanations and definitions and he's eloquent and I'm like, my brain doesn't work like that, partly because it's not nearly big enough. And that's just not how I operate. But when I see something in the chart as I'm doing it, I can just kind of be like, oh, this is an order block and here's why.
Yeah.
But that's buried within a 2-hour stream from 3 months ago. You know what I mean? So my editor has painstakingly gone through streams of the last several months and he's accumulated what is a breaker, an SFP, market structure, and all these different concepts where I've just kind of taught them on the fly. He's put them into one video. I just uploaded it to YouTube yesterday. Go watch it. But let's do that exact example right now. So what I saw happen yesterday, the reason I personally decided to long, starting on the high time frame, right? I would probably say that my execution generally of late has been on the hourly. My high time frame levels have usually been daily and weekly areas of interest. What I saw happen yesterday, we had obviously CPI. Everyone was touting, their CPI expertise. All I saw was last month's low get taken out, right? So we basically cleared out every single low that we've had, this entire consolidation. Every single low has now been run except for obviously June's low back here. So when we were trading down into this level quite aggressively, I aped into a long. As soon as we traded in there and we closed on the hourly chart, I was actually sitting on my computer like this, and I saw this happen. I'm like, I'm going to long on this candle close because this is literally just a very basic SFP. The reason I liked it and was willing to trade it was it's last month's low, so it's a key level. And I had my risk defined right away, right? When this hourly candle closed and I bought, I knew that if we got back below here, my idea is wrong. This is obviously the best case scenario anytime you trade an SFP is it's literally up only immediately after. That's not always the case, obviously, but I had last month's low get run here. So I'm like, okay, that's a key area that got ran and we saw a bullish reaction. So once the next daily candle closed, I said, okay, we have a breaker here. So ICT calls this a breaker. Some people call this, a
Engulfed
failed,
supply
yeah,
zone,
engulfed
whatever. Yeah.
supply and over. You can call it an over under, call it whatever the hell
Cluster.
you
Yeah,
want. The
yeah.
way I see it is we traded below a key level, and this was the origin of that move, right? So if you have a key level here, price is trading below that key level and then get back above, the origin of the move that took out this low is an area of interest on a potential retest.
Yeah, I call
right?
it a VPC, a volatility preceding candle. I'm joking, I don't. But
Exactly.
this is the thing we talked about, right? It's like everyone's going to more or less have the same area and you'll have 10 different names for it. It's more important that you can identify it and know what to do around it rather than the exact nomenclature, which everyone's repackaged about 50 times. So
Exactly.
basically, what was the big move? Like, where did the big move that took out a key level come from? Is that like a fair summary?
Absolutely. It's no different than like the order block or the supply or demand. It's like, okay, if we just had a volatile move to the upside, where was that point of origin? Here? Okay, if price comes back here, I might want to look for longs, right? Exact same concept here, except for it's like kind of like ignored, right? And you're actually doing the underside. So I call breakers failed order blocks is an easy way to think of it. This is a failed bearish order block because, okay, it made a lower low. You'd expect it to reject. When it doesn't, now I'm bullish on it effectively. But this was the area where that low got taken out. We traded above. I tweeted out, I'm like, I don't think you should chase this move. Wait for a retest. And so that's what we're seeing right now. So the way I would trade this is personally, I would zoom in. So there's kind of two ways you could trade this on the 12-hour. You could have longed this retest right here. You could have put your stop below the breaker. The other place you put the stop is below the low that got ran, but this is way too far.
Good luck with that
right?
risk reward in this market, right?
This is what, like 7%? Like we're lucky to get a 2% move. There's no way you're putting your stop down here. So how do you mitigate that? Well, you zoom in, right? You get more granular, like you said. So what I want to now do is I say, okay, this is now my area of interest. And some people are gonna be like, oh, look, Mayne, I mean, listen, I'm already like this. I already made a tweet about it. Like it hit the box and it's bouncing, right? So now I want to look on a lower time frame for a reason to get bullish, with my context being, okay, if this area is respected as support based on my high time frame of, okay, we ran a key high time frame low, we have this bullish breaker concept, which I consider like, okay, support. Now we're zoomed in on the hourly. I'm looking for bullish triggers. My high time frame view is bullish. I've got my reasoning why it's bullish. Now I want to get in on the low time frame in a way that lines up with that high time frame bias. So if my high time frame bias is bullish based on the daily, the weekly, whatever, when I'm executing on the low time frame, the idea is the probability of my little bullish trigger, whatever it is. Like let's say your favorite setup is an over under, right? Like, okay, this is how I like to get in longs. I like to have a little level here. Okay, well, if this is your setup on the hourly, if the daily is bullish, the likelihood of a bullish setup forming on the hourly and playing out is more probabilistic. That's what you would think. It's not always going to work like that, but that's kind of the idea behind top-down analysis. If I'm in line with my high time frame flow, exactly. All those things are lining up. You have more confidence. So now what am I looking for here on the low time frame? My favorite setups are SR flips and runs of lows. So looking just on the hourly here, you have this little consolidation here that led to the move up, right? We traded back down below it. So I think there's a very easy definable setup here. If we have this run here into our high time frame demand, if we're able to get back above here, I think that's a pretty safe to play setup. You have an SR reclaim on the low time frame. You have very clearly defined risk, right? If we go back below here, this reclaim was bullshit and you were wrong. That seems like a very legit setup. You have a very clear first target here based on the hourly, and then based on the high time frame. This is gonna annoy me here because all those disappear. You have our high time frame target areas here as well, right? This would kind of be, if this is bullish, I feel like this is the most obvious target based on the high time frame, right? So that would be the kind of hourly setup I'm looking at right now. If I didn't enter just based on this tag here, I think a reclaim of this little cluster here, this would be your trader SZ deviation. Deviation to me is just risk, right? Like, so if this is your level, if we deviate below it, this is where that idea is wrong.
Do you not stop out at support in that idea to some extent? And are you comfortable with that as like a cognizant risk? They're like, I need it to be right away. And yes, my invalidation is at support, but if it's going to support in the way I want it to, it has no business going back there. Is it that type of reasoning?
My preferred setup over this, the only reason I would say this one is this might be it, right? Like we might just tag this and go. So I want to have an idea lined up where if I don't get another chance to buy in here,
yeah,
I can get involved. I would actually much prefer consolidation here and then a sweep of this low.
Yeah.
Now you have that's an even higher hit rate setup for me. Let me see if I have an example of this. I think I do. I think it was here. So let me just delete these for a sec.
Good old sweepy boy.
I love sweeps, man, because to me, it's the easiest way to define your risk. And you get the, if you're wrong, like immediately, and you know exactly where you're wrong. And that's my favorite kind of setup. There's no ambiguity. It's like, it should not go back above this level, right? If my idea is correct. So let's see if I can find an example of a good sweep that I like here. Okay. I much rather, if this is my area of interest, I much rather have some levels pile up in here. And then I can say, okay, we now have a bunch of SFPs that occurred right here. So now I have an hourly breaker, whatever you want to call it, within this kind of high time frame resistance zone. And then this is your risk, right? Above that sweep, and you're getting in on the pullback. This is almost exactly the inverse of what I'd want to see at that 12-hour zone. So if I have that 12-hour zone here, I would like to see some sort of consolidation, a sweep, a break back above, and now I'm longing with my risk here. So this is just the inverse of this. Does that make sense?
Yeah, it's a sort of a form of low time frame pattern failure-ish as an entry trigger at proven, quote-unquote, high time frame support resistance structures, ideally with the context of some sort of spike or sweep of levels that matter. Is that kind of fair?
Absolutely. I mean, I love it on the low time. Yeah, exactly. And no one's going to understand it. They're going to need a second video.
There's actually a question that I want to ask about that specific 12-hour, the one you're looking at, the one that you had previously, that box, sure. the one that the market's the one that market's testing right now.
Yes.
So the entire thing is support, right? I mean, you draw out the box, but I think you and I both know, as much as we've been memed our boxes in the past, it's really the extremes that matter the most in terms of structure.
This is the entire support level. Absolutely.
Right. Exactly, but like if you had it as a very tight wick, right, as far as how you originally delineated it, and then within that type of wick area, it's really the upper boundary and the lower boundary the most important, right?
Yes.
So could you put it back to exactly. So in that context, if you now go on your entry time frame, like the 1 hour, with that level as you have drawn and presumably as you trade it, are there any circumstances under which you're like, look, this is the structure that has to bounce, otherwise the market looks like complete and utter dog shit, right? And then the long bias disappears completely. Now, where is the area where I could trade technically closest to my invalidation? It would be like at the exact bottom of the box, or maybe even like 0.5% or whatever below the box for some sort of wick. Is there any world in which you don't wait for a trigger and your thesis is like, this is so close to my invalidation, and within my system, this is such a good price that if I can get anything in that extremity or at that lower boundary, or even like 1 or 2% below it, I just want to fill there. And even if I'm wrong, I'll know quickly. And even if I'm like slightly right, so for example, it goes just from the lower boundary to the upper boundary, you can still make some money and manage that trade. So I guess within your system of being quite entry trigger oriented on lower time frames, once you've marked out those higher time frame structures, do you ever live in a world where you're like, man, if it gets to the extreme of the structure I've pointed out. It's like the upper boundary of resistance, low boundary of support. That's such a good price and such a good area to do business and so close to mine validation. Just give me that fill and I'll figure the rest out later instead of looking at the 1 hour or whatever else.
Yeah, I mean, absolutely. I mean, listen, technically for me, the way I trade these breakers is I actually consider the entire zone, including the where the SFP happened, as relevant. And then I like to get in somewhere within this box on the low time frame. Because technically we could come all the way down into here. And as long as we respect this wick, it's still bullish, right? That's really the high time frame invalidation. That being said, anytime we get a move that is a perfect retest, kind of like we're having right now, I have no problem entering in anywhere below the 50% line of the box or break or
Well, it's a
whatever the hell
range
you want to call
technically,
it.
right? Yeah.
Exactly. It's a price range. So if you remember back in my old charts, I used to actually draw the range on here and
Oh
I'd say,
yeah.
oh, 50% of the OB or whatever
Good
you
old
want to call
premium
it.
discount type of thing going on.
Exactly.
Yeah.
So I just got lazy, but if it's traded very quickly into this part of the box, I have no problem
Yeah.
just aping in, right?
Like, this
Because
is a good deal.
sometimes
Discounted, right?
exactly. Sometimes you just need to ape. And I mean, I always tell people this. I'm like, first of all, I have no idea if this is going to bounce. I look smart temporarily right now, right? The next candle could literally do this, right? Then I don't look so smart anymore. But one thing I always tell people is it's all about asymmetric risk reward, right? You have to have a system that allows for you to take some discretionary entries and say, listen, this might be an entry. We all hate the word confirmation, right? Because generally, well, where was confirmation on this move? It's like, well, price was already up 5%,
Yeah.
right? Like, yeah, confirmation was when the candle closed here, but the real money was made longing in this wick, right? So yes, confirmation would be, okay, this candle closing green and then, a new high and blah, blah, blah. You have to have room in your system for some discretion where you say, this is a really good deal based on this level. My invalidation technically would be very close to where I'm entering right now. And if I'm wrong, I'm losing 1R. But if I'm, right on my next trade, I'm making 2 or 3R, and it allows for those kind of, trades to happen. When they work out, generally they pay very handsomely. And if they don't work out, the idea is you're stopped out very quickly and your system allows for that. So I always tell people, I'm like, you're not going to be right all the time. And there's nothing wrong with, like, let's say you bought this initial bounce here and then it comes down again and you get stopped because you put a super stop, and to enter again, like, if what you see happens after you get stopped out, what you want to see happen, you can always get in again. Right. And that's the beauty of asymmetric risk reward, is it allows you to get -1R a couple of times, within your trading week, and those get outweighed by, the couple of winners that you had. So yeah, absolutely. I mean, if this wick went anywhere near this 50% line, I would have just entered.
Yeah, good
I
to
wouldn't
know.
have waited for anything on the hourly. I would have just entered. And I still think that, personally, I think what's going to happen, I mean, this is what I hope, because I'm not long right now. Well, I'm long a bit from yesterday, but I closed most of it. I closed, unfortunately, a lot of my long here. I missed this entire move. But I hope this happens. Like, I hope we get one more stab down. That's kind of what I'm hoping. I think this is going to be resistance, but I think you've got a pretty clear level here, right? If we get above here, I don't know why you wouldn't long at least into here.
That makes sense
Right?
to me. Yeah, I agree. I mean, look, the thing about prices is very good. Like, you might get confirmation at good prices, but you won't get confirmation at the best prices, right? And even if you're thinking of it from like an order flow perspective, people say, oh, well, can't you look at the footprint and look for absorption, etc. Even from my study, a lot of the setups that come from that, they'll see like a block of heavy selling that gets soaked up, and only when price starts trading above that like heavy outsized delta or that block of heavy selling or whatever, then the setup triggers. They're like, oh, those positions now underwater. That's still a form of confirmation, even if you're not sort of pure candlestick trading it, right? That's a critique I see a lot as far as SFP setups go, and I think it's a very fair one, which is like, look, on the SFP side, if you change your time frames, you can have the same move, and on some time frames it is an SFP, and on some time frames it isn't, right? Which is sort of a very common argument. But I think it sort of misses the point to some extent, because the trigger trigger is the same. You want to see the people who sold through that low not have a good time. And whether that's price moving through that block of delta, whatever it may be, or a candle close, etc., it's the same trade idea, right? That someone did business at a bad price and now it's going to get away from that area, type of thing.
Yeah, trap traders, whatever, whatever the hell you want to call it. But no, I
smart
completely
money,
agree.
central bank manipulation.
SMC price was delivered, and then the whales' footprints were here, but whales don't have feet. Their footprints were in the charts.
Exactly. No, that was some very helpful color, and it's always good to peer into the mind. And it also just means you're quite flexible in that regard, right? If you know you're getting a really good price, you can ape in. If you know you've missed some portion of the move, if it keeps going, you've got methods to get in as well. But I think the core premise remains of you've got very clear levels where you want to do business. You're trying to get as close to your invalidation as you can. If you can, great. You can jump onto it with less confirmation. If you miss it, then you have thresholds elsewhere, lower time frame levels that could give you more confirmation. But you try to stack the deck in your favor as far as the structures, what time frames they're derived from, the trends, so on and so forth.
I think two important things there. One is, see how much easier it is to look on the market on a low time frame when you have a high time frame bias. Like, we're talking about long setups because we did that top down piece first. Okay, I want to be bullish in this area, because if you just open up the chart with no levels on it, what are you looking for here? You have no idea, right? I feel like that's where a lot of people get lost, is they're looking at the low time frame. They go, okay, well, am I looking to long or short here? That whole idea of top-down analysis for me is so when I get to those more granular time frames, whether that be the hourly or the 4-hour for you or something even lower, right? Like, you're looking at the 5-minute chart, you're like, well, this just looks like noise. If you have that high time frame view first, where you kind of build that framework out, okay, where's the area that I'm looking for? First of all, am I bullish or bearish? Okay, where's the area where, if I'm bullish, where's the area where I think support should be? Then when you zoom in, it's kind of like mapping out your targets in advance. And now when you zoom in, it's like just taking a scope, and you can zoom in. You say, okay, I'm going to ignore now any sort of bullish potential. Oh, well, we made a lower high here, and this is a break in market structure, and maybe this is going down now. But it's like, okay, but in this high time frame uptrend, there's going to be periods of down. And what you don't want to do is be lost on the low time frame and being like, oh, this is super bearish, only to find yourself being bearish into that high time frame higher low. That's what we're banking on here. We're banking on this being a higher low here, right? On the 12-hour. The 12-hour is just going to look like this. But on the hourly, you might have, a little bit of a downtrend, and you don't want to get lost in that. So having that high time frame view makes it a lot easier to then go on the low time frame and say, okay, I'm looking for reasons to be bullish here. Now, all of a sudden, your life is a lot easier. You're not getting confused by, okay, well, this is slightly bearish, blah, blah, blah. I'm looking for reasons to be bullish. And the second thing is what you just mentioned. There's some trader, as Z says all the time as well, right? You want to have multiple plans. It's the if this, then that scenario. Like, you'll always see trader as Z. He always has something along the lines of his trend line breakout setup, right? Where it's like, okay, if it gets above here and then does this, I'm entering. But if it dips lower, okay, I have a setup for getting in here, right? There's always more than one way to get in. And generally, that's, in my opinion, why he's so successful, is he's prepared for the setup where it comes in really deep and you got to just get in and that you don't get the confirmation. And he's also prepared for the setup where it comes in and dicks around and then gives you kind of, a more clear setup that took a little bit more time to play out. Having the ability to view the market in that way, where it's like this, it doesn't need to happen exactly this one way. There's more than one way that it can come to this level and give me the reaction I want, and I'm prepared for either. It removes so much emotion and doubt from your mind, right? You get rid of like the fear of missing out on the move, right? You have more than one way to get in. You can get in on the deep pullback, or you can get in on the breakout. You can get in on confirmation. You can get in on whatever. Once you start viewing the market that way and say, okay, if it gets above here, I'm going to long. Or if it pulls back deeper and does this, I'm going to long. Now I'm not really worried. If it goes up and I'm not long yet, it's okay. I have a plan to get on board. If it pulls back deeper, I'm not worried. I have a plan to get on board. So I think that's super key.
Yeah, it just helps to have a directional bias, like especially in this type of market where everything is so mean reverting. Man, you got to pick your spots, right? Because if you're not doing that, you're going to have a rough time. I think what we've seen a transition. The if-then logic used to be unpopular because it would get memed into so up or down, lol, XD ratio, type of thing. But I feel like, I don't know what you think of this. Just kind of throwing this out there. Some people kind of lose the directional bias element of that logic, where it's like, look, we're in an area of support. I'm generally more
Yeah.
interested in longs than shorts, and these are just a couple of the ways that they could unfold, right? What I've seen instead, and this is just from personal observation, maybe my feed is shit, people have lost the directional bias part and only have the if-then part, but they'll have like 10 different plans at the same level. And you've got like 5 short setups, 5 long setups, all at the same level, and that ends up sort of by trying to remove the noise, you've added more noise, right? And you're
Yeah.
almost trying to like force yourself to, if the market's going to move a single point or tick from this level, I need to be on board. Whether it's up, down, sideways, or whatever, they end up making like 5 different squiggles, hoping to
I
whatever happens,
know.
whatever form it
And
takes.
we used to get made fun of for the squiggles. You'd be like, okay,
Yeah.
this it's gonna go like this, or if this happens, it's gonna go like this. And they'd be like, oh, so up or down, bro. And now everyone's chart has
Yeah.
about 25
Yeah,
squiggles
that's
on
the
it. They're
point.
like,
You
well,
can't
here's the
overcook
level.
it. You agree, right? Like you can definitely
Of
overdo
course,
it in
of
terms
course.
of your planning to some extent. I mean, that's not an issue a lot
There's
of people have, but I think some people just took the if then and went way too extreme with it. Sometimes a level is like only like if you're in an uptrend or whatever, or contextually. Sometimes a level is only for longing. Or like
yes.
90% of your idea should be like very much influenced by a directional bias, and you end up tricking yourself by saying, well, I've got a bullish plan, I've got a bearish plan, I've got a bullish then bearish plan, a bearish then bullish plan. It's like, dude, chill out. Delete your lines. Like if it's support, you should at least be able, your system, I think, should give you
You're
some sort of bias or inclination one way or another most of the time. Not every level is as equally tradable in both directions, and it's not always
exactly.
50-50. And I just think
That's
people kind of
exactly
lost
what I was
track of
gonna
that.
say. If I'm looking to long here, just because it goes below here doesn't mean all of a sudden I'm shredding
Right,
the
right.
underside
Thank you.
retest.
Yeah.
If my bias is bullish, I'm looking, and there may be more than one way to get long. Sure, if this happens, I do this. If that happens, I do that. But both of those if then scenarios are bullish because that's
Yeah.
my bias. If you don't have a bias at all, yeah, you're definitely
It's just like coins,
missing the
and just
plot.
flip a coin at that point, right? And it's
Yeah,
like sometimes it's okay to say, look, my bias is this. I can long A, long B, and if I'm wrong, I eat shit. And then people
yeah,
forget that last part, that you can just eat shit. It ends up being part of
yeah.
the plan a lot of the time.
You
But
can
they're like,
just
but
be
no, if I'm
wrong.
wrong, I'll end up flipping short perfectly. But then if your short breakdown setup turns into a deviation, I can re-long it. It's like, bro, you've taken 6
Yeah,
setups
you're
at the
negative
same
6R
level.
on the day, and we moved 2%.
Yeah, 100%. I agree with that. No, that's very helpful. We could look at ETH as well, given how much time we spent on Bitcoin, just in terms of technicals, levels, or whatever else. Not to make things too well. Look, I think this is one of those arguments as well where you can be forgiven if you just draw the ETH prior all-time high at 1400 or wherever that is, and similar to
Yeah,
Bitcoin, saying, look, if it's below 20k, come on now, stop taking the piss. You can say the same argument for ETH, right? If you're below 1400,
absolutely.
stop taking the piss. And look at that level on the weekly, for example. That was like that's been a very decent flip. On the daily as well, not as much recently. The market hasn't had the courtesy to even use that as its range high. It's been in a much more narrow range than that. But both on the weekly, on the daily, this 1400 prior all-time high level, even cleaner than Bitcoin, has been the sort of
Yeah.
line in the sand pivot, and we're currently below it. Does that sort of resonate with you? What other spicy levels have you got for ETH? What you got cooking? And also, there's like a
So
4-hour version, I think, on ETH of your 12-hour Bitcoin breaker type of thing. Do you
exactly,
agree with that
there is.
assessment?
Absolutely. So we'll start on the high time frame. So the monthly, the levels I have are previous all-time high. This is, your 20K Bitcoin. This is your 13K Bitcoin level, right? Those monthly closes. We've already spiked that on Ethereum because Ethereum is down more than Bitcoin overall, right? And then this would be kind of your 10K Bitcoin level here at 670. I am a believer, much like on Bitcoin, in terms of value. I think this is great long-term value on Ethereum. 600 to $1,100. I think if you believe Ethereum's going to 5 to 10K one day, which I think is reasonable, assuming we don't have nukes launched and the world ends
Yeah,
anyways, then
for
what are we
real.
even talking about? We should be rationing food. Um, I think this is great value long term. How long term? Again, I don't know. 12 months, 24 months. I mean, I do think one mistake that people have made is they said so the Fed effectively announced that they have a terminal rate, right? This is as high as rates are going to go, right? So I think there's a few things to digest there. First of all, we're not at that rate yet. So that leaves room for more rate hikes in the future. Secondly, once we get to that terminal rate, I think it's 4.75 is what they said. That's as high as it's going to go. It doesn't just mean that once rates get to that point, inflation peaks, it doesn't just instantly reverse, right? Once they're like, hey, we're only going to do QT up until this point, it doesn't mean that immediately they switch to QE and everything unwinds immediately and we start a bull run again. Powell effectively said it in his last speech. He's like, I'm willing to crater this shit so we can have expansion in the future. Right. So if you're a believer that we're going to have expansion in the future, which I am, and I believe Bitcoin is part of, and crypto is part of that risk asset basket where the stock market over a long enough time frame looks like this, right? Crypto over a long enough time frame looks like this, but even steeper actually, right? So I do believe that that's going to happen again. The question is when and how long can this all take to unwind? But I do think if your time horizon, like if I'm talking to like, hey, listen, I want to get some exposure to crypto. I've told this to many of my friends already. I'm like, listen, Ethereum between 500 and $1,000, Bitcoin between 10,000 and 20,000. I think long term, that's pretty good buy. So that's kind of where I'm thinking on Ethereum, high time frame investor mindset. From a trading kind of, landscape here, I think Ethereum's trading a little cleaner, I guess, than Bitcoin. I really like the weekly setup here on Ethereum. You have this weekly order block or weekly demand near a key monthly level, and we had a sweep happen within this zone. So I'll zoom in here. Let's draw these without that tool so they actually stay on the chart when I change time frame here. So we'll take that. We have this key last month's low, and then we zoom in to a little bit of a lower time frame here. So we have this high time frame area that should be support. If you just want to do kind of your eye test, right? This is a pretty clear SR level, wouldn't you agree? Like that consolidation's high. We're retesting that. I think that's a pretty clear area saying, hey, I want to look for potentially reasons to be bullish here. Obviously, we don't love that basically for a month straight, we've been just pounding this level, right? I completely agree. Similar to Bitcoin, you don't want to see this where it's like multiple retests, but at least Ethereum has kind of had this large move away and we've come back to the level where, as opposed to Bitcoin, which is basically we had that one move and then we've been like this.
Do you think a sweep sort of resets the count for the level, if that makes sense? Where it gets hit once, twice, 3 times, 4 times, you're like, oh, fuck, this is looking weak. And then it does kind of like either a sweep or a failed breakdown and then comes back up. Does that sort of refresh the count in your mind? Like, oh, maybe this level isn't as beaten up as,
That's interesting. I haven't thought of it that way. But I think unintentionally think that when I'm like, okay, this level looks like shit. Oh, we SFP'd it. Now I really like it.
It's fine again. It's fine.
Yeah, so maybe that is the case. But this is a perfect example of how my system works. Weekly demand here, weekly SFP, zoom into the 12-hour. I go and find the OB or the breaker that caused that sweep right here. I'm buying this all day. Like this is a A1 trader Mayne,
and it's on the 4-hour as well, right? Like pretty much
on the 4-hour, you can get a little bit more granular, right?
Oh, look,
it's the exact same.
Look, basically,
same
if this setup fails, your system is a fraud, right? That's kind of
exactly
what I'm getting
negative
from
1R, and I gotta restart.
We make a new stream, come up with a new strategy. Because if this A1 setup fails, I don't want to hear about your A or B or C setups.
You don't want to see the C
neck
setups.
on the line here, and you and I both know
Nobody
that's
wants
a big
to
deal.
see the C setups. I promise you. So one thing is I'm willing to let this trade deeper into this candle. So that's something that I've learned over the years. I used to be very strict with my breakers where if it invalidated this candle, right? Like we were talking about earlier, oh, it closes below here, I'm out. Like I'm wrong. The breaker has failed. I have learned over time, and I don't know, this is just from my experience, is there's been enough setups where I have the breaker marked and we've traded into what I call like the deviation, the move that the breaker generated that took out, this is that key low. We've traded into this level, but then still respected it. So this has happened to me enough times where we have the breaker, we trade down into it, we never break that initial low, and then we get the move up. And it's like, well, if I would have just traded the breaker, I'm stopped out and I missed the move, right?
So just give it more space now, some room to breathe.
So I give it more space. And the way I mitigate for that outside of like, I'm not putting my stop here. I'm not entering here and put my stop here. That's crazy. But what I do is I zoom in, right? And I say, okay, this is what I call the breaker zone. So I've expanded the breaker to an entire zone, which includes the wick.
Just make the box bigger. That's
Make the box bigger. That's how
how
you.
to
But
find edge in crypto trading. Make the
what I'm
box
now
bigger.
looking for is within this much larger box. It's not okay. This is my entry and this is my stop. This is the range where I am looking for a bullish setup to form within on the low time frame. So maybe that is a sweep of this low. Okay, stop is now here. Entry is here. It's within this box. The setup effectively has to happen within this box. And as long as that's maintained, I'm willing to be bullish on any sort of bullish SFP, any sort of, maybe we trade low, lower low, whatever happens, whatever the setup is, whatever trigger you want, it just needs to happen within this big gray box.
Yeah.
So I'm not making the box bigger as being like, oh, don't worry, just enter and make your stop way further away. I'm actually not entering the box based on the box at all. This is now my like zone. Imagine
it's your directional bias kind of guidance.
Exactly. This is my make boing zone. Looking for reasons to make boing within this zone.
Yeah.
So that's exactly what I'm doing here on both Bitcoin and Ethereum. Within this very large box here, I'm looking for low time frame bullish setups to form.
Yeah.
And if it doesn't happen, it doesn't happen.
The video gets deleted. That's what happens, right?
The tweet gets buried. I can't delete it. I'm on crypto deleted. I can't hide anything.
Oh, I see. I see. You need to just spam irrelevant things to clog up the feed,
exactly.
right?
I just tweet about how Rock Lee has autism, which we'll talk about shortly.
Perfect.
But I've been stopped, and this is what we talk about with, we've been doing this PA thing for years. I'm still learning, right? Like technically the rules of the breaker are, these are the bounds of the breaker. And if it closes below here, the breaker's invalidated. But over years of doing this, I've had enough situations where I've seen price trade below the breaker, but still respect the general idea of, okay, we ran the low and then still made a higher low here and went up. Why am I missing all these trades? Okay, let me refine my system to say, okay, I'm willing to allow price to trade into this area, but I then need to see something on the low time frame that allows me to define my risk other than here. I can't have my risk be that far away. So I need to zoom in to get that granular level of like, okay, where's that bullish reaction? Is it just a simple trend shift on the low time frame? Or is it, some sort of low time frame breaker within this high time frame? Whatever it is, I'm looking for it to happen in this area. So on both Bitcoin and Ethereum right now, over the weekend and into early next week, I'm looking for reasons for bullishness to happen in here. I do dislike how big this particular make boing box is. And I do think part of that is just due to the fact that this was such a large move, right?
Yeah.
I like it a lot better when the move's a little tighter. But these are the rules of the system, right? Yeah, of course. Tighter is generally better, unless it's a parking spot.
We're talking about spreads. Oh, yeah. Okay, sure.
Yeah. Parallel parking. So again, same with Bitcoin. This would be technically the breaker zone, this entire range here. I don't obviously want to just enter now with my stop below 18.1. That's nuts. I would have to be targeting 30K for this trade to even make fucking sense. But I am willing to zoom in to the hourly or to the 4 hour and say, okay, let's see if price consolidates here. What I would love to see is this, like over the weekend, just nothing. Give me some sort of big low that can get run and then a reclaim.
Yeah.
All of a sudden, now I have a trade idea. It lines up with my high time frame bias, and I can look to get in something.
Yeah, I think two interesting points come from that. The first is that if you have some bread and butter price action-ish concepts, you can actually build quite a good multi-time frame system from them. It's like the breaker idea, if it's a 12-hour breaker is kind of the larger idea itself, but within that, if you're looking for triggers, the few patterns you mentioned, like the order block setup, the sweep, the breaker setup, the over-under, whatever, you're using kind of more or less the same patterns, just on different time frames to make the whole idea make sense, right? Which is cool, which means you don't need to go from like, okay, on the 12-hour I only have this setup, but then on the hourly I need to look for something completely different. If you've got your bread and butter, more or less, you can kind of, the whole price is fractal meme you like to talk about. You can kind of transfer your higher time frame logic onto lower time frames, and you kind of know what to look for because it's the same setup. And the second point also is also quite funny. You made a point where you kept, when you use the breaker rules very strictly, and had the very narrow zones, you'd get like stopped out and then the move would eventually happen. I've always found that to be like absolutely hilarious as a matter of logic, where people would say like, oh, let's say 20k is like a really good level, or they for some reason that's important for them, not for some reason, but assume the chart looked different, right? It's like 20k or 30k, whatever number you can think of, and they'll put their stop like literally one tick below this supposedly amazing giga mega support structure that their entire trade idea is based on, right? So to me, it always seemed so contradictory. It's like, if this structure is so important, if price wicks a few percentage, depending on the volatility or whatever, if it wicks slightly below this all-important level, you shouldn't be getting stopped out there. You should be like aping into that, right? Because you've ascertained that this level is so important to you, and you want to do business there, and now the market's giving you a quote-unquote a discount there closer to your invalidation. You end up by stopping out, like, as you've seen those charts that I'm referring to, I'm sure you can visualize it in your head. They'll have like the breaker, and then there's risk-reward trading view tool, like the red bit literally goes like on its boundary. It's like, bro, you're stopping out at what should be within your system the best price within that breaker, within that support, within that range, within that structure, and that's where you choose to not trade, and where you're actually going to sell the best level of support or buy the best level of resistance. It has never made any sense to me, and I agree with you from my journaling as well, especially depending on the conditions, but just giving your levels like a bit more room to breathe, or even if you want to stay granular, give it a bit of room to wick, for fuck's sake, before deciding, oh, my idea is completely garbage because it wasn't like, to the pit, to the tick, to the
There's
point.
A very
whatever.
funny. So I mean, ICT used to always talk about this, but I mean, if you trade forex, right? If you're trading an SFP, right? Like if you're trading this SFP here, and your stop is above here, you don't ever put your stop directly at this high, right? You give it a couple points. You give it a little bit of room to potentially trade a little bit higher. There's spreads involved. So you got to always give it a little bit of variance and leave a little bit of breathing room. It's very easy to be like, well, this is the technical level, so my stop goes right here. I completely agree with you. I didn't mean to delete that. You got to give it a little bit of room to breathe. This is my entire system here, guys, if you're wondering.
How much do we owe you?
Setups. Yeah, this is $300 a month in perpetuity.
Wow, that's cheap compared to some of the stuff floating around right now, I'll tell you that much.
Exactly. So this is an order block, right? This is an over-under. This is a breaker. These are my entry triggers. The kind of magic happens, I guess, where my high time frame, I'm looking for a bullish order block or a breaker or a support level, and then I'm zooming in. And when we get to that high time frame order block here, I'm now looking for one of these to occur within that high time frame order block. So if this is my 12-hour order block here, right, and price is trading here, I'm zooming into the hourly here and looking for one of these three things to happen.
Yeah.
Within this larger one of these or one of these.
What's the lowest you've gone? Just as a random question. It's like weekly, daily, 12-hour, 4-hour, 1 hour,
I had
1
a
minute.
period of time where I was trading the 1 minute, not in Bitcoin and in crypto, but in Forex. Like I had a period of time where I was a Euro USD maven. 97 cents. How you boys doing over there? I guess you're on the pound.
It doesn't make much of a difference. Yeah.
Let's just look. Not awful. I mean, listen, better than the Canadian dollar.
It is what it is.
But I used to have a system where I was literally trading. Like I would be like, okay, I have a 1 hour SFP here. Is it gonna let me go back this far in time? I was getting down to the lowest time frame imaginable
that your subscription supported.
I was gonna say, do I have enough trading view dollars to go this far back?
That's good.
Where I'm like, okay, this is a 1 minute breaker here. So that's a 1 hour SFP, right? Here's the 1 minute breaker.
This is the exact setup you caught, by the way, right? Obviously.
Yeah, of course. But look, if you would have had your stop right at the edge of the breaker,
you're a psycho if you do that. You're a psycho.
You got stopped out, and let's assume your negative 1R is $1,000, $2,000. Like this is like a 2 pip stop. That's crazy. You know what I mean? But I absolutely had a period of time where I was trading these on the 1 minute chart, and the stuff works. I just found that, first of all, my strike rate on the super low time frame wasn't great, and I'm also not a fan of having to be dialed into the chart and not having any time to kind of formulate my opinion. You literally had, 1, 2, 3, like 10 minutes to enter this trade, or you're fucked. You know what I mean? So you got to be watching at the right time. The period of time where I was trading this was when I was trading pure Forex. I was watching London Open, New York Open an hour before, right? Each session. And I was looking for a specific thing to happen within a very small period of time. So I do absolutely think that you can trade on the very low time frames with price action concepts. But I think time plays an important factor. Like some random 5-minute swing failure pattern to me is not relevant. It's when it's happening at a key, you still need that key high time frame bias. So like,
Yeah.
why was this 1 hour SFP a good SFP? Let's see if I go down to the daily here. Did we lose that level? Oh my God.
It's lights
Yeah,
out.
here. Let's see what time. This is London Open, right? So there's that very element of time that also plays into a factor, right? Okay, this was London. This is Asia's high that got taken out during London Open. Okay, maybe that's a reversal, and the rest of the day is going to trend to the downside.
So it's like the
So
system
there-
kind of scales down on any time frame, right? You can go from the weekly to the hourly. You can go from the hourly to 5-minute. Your system is
Exactly.
basically, it reminds me of, those Matryoshka Russian dolls where it's like the same
Yes.
3-4 things, and just like they get smaller and smaller, but it's kind of the same thing at its core. That kind of chart book makes a lot of sense, where you've got your bread and butter. The high time frames tell you where to look, and depending on how granular you want to get, nothing really changes other than the time frame. The setups are the same and everything else.
But still top down. This is why I tell everyone,
Yes.
it's still top down. Your top time frame could be the hourly, it could be the yearly. It doesn't really matter as long as you're like, okay, my bias is based on the high time frame, right? So if your high time frame is the hourly and you're bullish on the hourly, then when you're on that 5-minute low time frame, you need to be looking for one of those bullish fractals or setups.
Yeah. Final question I have about system, then we'll quickly chat about the S&P. Don't want to keep it for too long, obviously. And yeah, so not the concern, but one thing that comes to mind. This has certainly played a part in my trading before, especially when I've tried to get perhaps too granular on low time frames with high time frame levels. Like, how if you're on the weekly, sometimes a weekly level of support can take a couple of weeks to play out, right? If you're on the daily, a daily level of resistance can take a couple of days to play out. And it sort of scales with time frames to some extent. I think is like a fair assertion to make. And what I found is if I haven't been patient enough with the level itself, even lower time frame setups they ended up taking at the high time frame zone kind of ended up being noise sometimes, right? So for example, you have like a weekly level of support and the market bounces from it, 2 weeks later is when you get your big move. And that's not abnormal, right? If you think about it on the hourly, and I say you've got an hourly level, the market bounces 2 hours later, that's normal. And if you've got a weekly setup, the market bounces 2 weeks later, fine. But what I would do is I'd have that high time frame level, go down on the intraday to like get an entry or whatever, and it ended up being choppy, noise, stopped out, whatever. And then after some high time frame candles or the kind of requisite time period passed, then there was that period where you look for low time frame setups and the whole thing kicks off. So I guess it's a very long-winded way of asking, do you ever get sort of timing issues where the move takes longer than your lower time frame entry triggers require, and it does just end up being chop and noise, and then maybe a day, a week, or later on that same week, whatever, you get an intraday setup and that's the one that sends? I don't know if that question makes any sense.
I mean, look at this is a good example on the S&P here, right? Like I think a lot of people thought this is the first, when we kind of finally thought we were trading down, this was the first high time frame level where everyone thought a bounce was going to happen, right? And this is where that big ripper of a rally did happen. But this is a monthly chart, right? So this takes 3 months for this rally to play out. If you're looking at this level on the daily even, like there's a ton of shit happening here, right? Before you actually get that level to play out. So you're like, okay, maybe I'm longing this reclaim, right? Well, then you get stopped out here before the actual move happens. Is that kind of what you mean?
Yeah, it's exactly what I mean, right? How there can basically, the higher the time frame, the generally speaking, the higher the likelihood that you get some chop and churn before the move actually comes. And if you're hunting on too lower time frame or looking for entry signals on much lower time frames to resolve quickly, there's a decent chance that the move takes longer to unfold than your lower time frame entry would suggest. Does that happen to you? How do you mitigate it? All
of
that
course,
stuff.
the way you try and mitigate it is you got to remember, if this is a monthly level, all you really care about is where the monthly candle closes. So having date, and people will ask you this all the time. They're like, okay, well, how do you know when a level's been reclaimed or lost, right? Okay, I have a daily level. Well, if a 5-minute candle closes below it, is that daily level invalidated? Of course not, right? Because then it ends up being just a wick, right? That's exactly what happened here. All of this was just a wick on the monthly candle. The monthly candle never closed below 37.55. And then you got that huge rally. So ways to mitigate it, I guess, right? One is you do want to see, I do like to see, like, so for this trade, because I did end up longing a large part of this move, is I wanted to see price trade back above this level as a reason to get bullish. But then I paid attention to when the monthly closed. So if you actually look here, right, once June closed above the level, it gave me confidence that any sort of move back into this low, or back into this level, excuse me, was a buying opportunity. Because when that first monthly candle closed and respected the level, even though we traded below it briefly, that gave me a little bit more confidence. But at the end of the day, I think the way that you mitigate it is you have to remember where the level is derived from, and then not get too granular around that level. I don't think you should be trading the hourly chart, right, of a monthly level.
Yeah.
Like, I think you're going to get chopped to bits. Like, if you're trying to trade this level on the hourly, you have no idea if this is a good
You've
level.
taken like
Really,
6 breaker over under order block trades and the market
there's
hasn't
so
moved and
many
you're down.
SFPs,
Yeah, yeah.
reclaims here where you're like, okay, this is the one. It reclaimed the level. Well, guess what? It came right back down to it. You probably got stopped out.
Yeah.
And then eventually, like you said, look, eventually you were right. Right. So I think what you want to pay attention to is, where's that level derived from? If this is a monthly candle, I want to see where the monthly candle closes, and then I want to step in. So that
Yeah.
might mean that while we're churning at this level, you don't touch it initially, right?
Yeah.
Mark the level, wait for us to get maybe closer to the end of the month. So
Yeah.
when we come towards the end of the month of June, and then all of a sudden, okay, boom, we actually closed above. Then look what happens on the next retest. We close the monthly above. The next retest is the final one that ends up being an SFP that sends us higher. And we also had, this is the exact trade I took right here.
Yeah. Yeah. Yeah.
This is exactly what I hope happens on Bitcoin right now, by the way, right? Big run on the low, reclaim, breaker, another leg up. This is
Yeah.
exactly what is potentially playing out again here, but it looks a lot less likely right now.
So the
But
answer to the question is basically scaling
Get
timeframes
fucked.
appropriately. Well, yes. Actually, that was going to be the second part of my answer, right? In terms of just like getting the timeframes right, especially when trading high timeframe levels, and you're looking at low timeframe levels at high timeframe areas, which could be more noisy. You have 2 solutions. So, I mean, one of them is a solution to be aware of your timeframes and scale them appropriately. And the second one is sometimes you'll just eat shit. And that's fine.
Yeah.
You know, like if you enter on a time frame and it's not the move, as long as the level is fine and it might generate another setup, nothing wrong with, as you mentioned close to the beginning, relonging the same area with a different view once you have more kind of candlesticks to work with, right?
And the reason it's so easy to go on the high time frame and be like, oh, look, like the most obvious monthly level provided a balance. It's like, yeah, but the reason that's hard is there's no way you just bought this and did not puke this. There's no way. You know what I mean? Like, there's no way you said, okay, it came to 37.55. I'm just longing, right? And then this initially, before it closed like this was an entirely red candle. You know what I mean? Like, I don't see how you're not puking a 200-point move past your entry
Yeah.
on equities, right? You are. But it seems really easy in hindsight. Oh my God, look, it came up into this most obvious monthly level, and that was the top. But chances are on the low time frame, you did not think that this was where the rally was going to stop or where it was going to perfectly reverse. So exactly, you have to be aware of where the levels derive from. Don't get too granular on a monthly level, right? A monthly level, I wouldn't really go lower than the daily to
Yeah, same.
consider anything relevant. And so for this top, the way that I caught this down leg here, I was not short here at all, right? But when I had this monthly level marked, I would have loved to have short 4,300. But what I did is the exact same thing I explained down here. When you go down to the daily, you're not catching this move, right? Rather, I'm saying, okay, we rejected that. The monthly closed as a very ugly candle. Now my bias is bearish. We just respected a monthly resistance level. Well, now on the daily, you have a pretty clear downtrend here that gave you a very nice, this was the setup in my opinion, right?
Mm-hmm.
not this. Just like this was not the setup. The setup actually occurred well after that candle closed, and you got the much cleaner retest after some time had passed at that level.
Yeah.
And then absolutely there's going to be the times where, like you said, you just eat shit and you're just dead wrong. You buy this level and you're wrong. And it is what it is.
Agreed. Charge it to the game, as they say. I mean, something I do,
Yes.
as you can imagine, is a premise that I alluded to earlier in the show, where if I really like a level, I will let the market violate it. And then in terms of how the candle is forming in my brain, I'm like, if I'm right, this is the wick, and this is like a god tier entry. And obviously it's look, it's the classic higher risk because less confirmation, but also higher reward because I'm getting a higher price. So you kind of want to know in your mind how you're scaling that, right? Do you want to trade at the level or even through the level with less confirmation, higher risk, higher reward? Or are you going to let it play out and then you've got the confirmation, quote unquote, or the probability on your side? You won't get as much kind of the best price, but you're likely to get, as you mentioned in all those examples, like a follow-up setup in the same direction. I think either is fine as long as you end up in that awkward middle. Do you know what I mean? Where you're like not getting the best price at the level, but you also don't have the patience to like wait for a real setup, and you end up chasing the market, right? Like, oh bro, look at that reaction, and you're fucking late if you end up being that type of momentum monkey. In order to wrap up, do you have a final?
It's exactly like this, right?
Yeah.
It's.
I mean, look, your neck is on the line
like,
for this. Like this setup right now that you've got, this 12-hour, this is your route to YouTube stardom.
My editor is gonna clip the shit out of this if this works out. We're gonna have TikTok
Hi,
content
YouTube.
for months.
Yeah, exactly. No, that's very fair. To wrap up, S&P 500. One thing that I found quite interesting is that macro has never mattered more. But if you're a candlestick make boing guy, as per your monthly chart, the technicals have also never been clearer, right? So there's a certain irony involved where everyone's looking at everything other than technicals. But if you pay attention to like proper high time frame levels like the monthlies, this is pretty much the exact chart we've had in Technical Roundup. Like it's been really technical. So you could have kind of sort of ignored all macro, not that you should in general. It's been a good learning experience, but the market's been trading very clean in that regard. Do you have kind of expectations or biases or similar type of high time frame monthly, weekly analysis for the S&P? Because obviously it still matters and the correlation still matters, etc. We seem to be at support according to your monthly cluster. I think that entire kind of 2 down candle move is probably relevant within your system, right?
Absolutely.
So are we at support? We're sort of between support and resistance, if I had to guess, according to
I think
your
we're
levels.
I think we're kind of sandwiched here. The other level that I like for the S&P is June's low, obviously. I think that is a level that we want to get above for at least short-term bullishness here, right? So this is the one kind of thing where we're have some variance from crypto is we're still trading above June's low, whereas stocks we initially, we're trading above. But I think short-term bullishness, we want to get above June's low, which is this previous swing low, and this would be kind of your deviation. But I agree, this has been trading extremely clean. You could have just drawn every obvious monthly level and caught most of the big swings. Again, just to our last conversation, unless you're DonAlt, who's just a Chad and goes, oh, this seems like a good monthly level, I'm just going to buy and sell here. Most people can't do that. Like that's just the bottom line. And I'm one of those people who cannot do that. I know this is a good level. And I know that if we bounce here, I'm targeting here, but I am not the type of person who has the ability to just, and the patience more than anything, because I don't have as much of a life as Don, obviously, where he's like, this seems like good support. And this seems like the obvious place to probably scale out of some risk. Right. And I'll just come back and check the charts once a week. I assume that's what he does.
That's absurd,
but most of us are in front of the screen, whether I'm playing video games or watching YouTube videos. I've got TradingView on one of my monitors and I'm like, oh, fuck, but maybe this level isn't going to hold and da-da-da. And then when we get up here, I'm like, oh, shit, maybe we're that old guy who says we're going to melt up is right. We are going to melt up.
Strap in. Yeah.
Exactly. Strap the fuck in. But in terms of just clean ass levels, does it get much cleaner? You got 3 monthly levels here that have caught every single swing, right? Low to high, boom. So what you would hope now is that this wasn't the retest and this is the reject here. Like that would be bad.
Stop it.
I think.
Yeah, it would.
Right. So I do think we want to first get above here and then above here. And then maybe, okay, we'll have some sort of larger retracement into this range here.
Yeah.
I don't know how
It's
high.
very
Maybe
downtrendy at the moment, isn't it? Like looking at it face value, it's just like
it
stuff is
looks
breaking,
bad.
support turning to resistance. I mean, I quite like this area that I've got the exact same level at like, 35, 3300, that entire
Yeah.
two candle down move. And the bottom of that cluster also lines up with, the pre-pandemic crash high or
Yeah,
whatever.
so I really like, I think I had another chart with it, but I really like kind of this area as a potential. I don't want to say bottom because it's way too early, maybe, but like this is still another, almost 10% down.
Yeah.
And if you look at so many of the stocks that caused this, right? What really caused this bubble here? It was not, it was tech, right? A lot of
Of
high
course.
growth stocks. All of those have retraced to or well below their pre-pandemic levels. So I think just logically, you would think that we would come back to kind of the pre-COVID levels as well, no? And we're kind of now just getting into that area, right? With these two down candles, here's that pre-COVID high. This just seems like a magnet for price, 32, 3,300. And then we see what happens.
I
I
can
think
tell
you're
you what's going
starting
to
to
happen. If it gets there, we'll just chop ourselves for 3 months and we'll be down like 10R cumulatively. And then it's going to like rip faces. That melt up guy is going to be right. And in hindsight, we'll feel like idiots.
Yeah, I mean, I would love like that to be the bottom.
uh,
And yeah, we all lose all of our money here
yeah,
anyways, so it doesn't
literally.
matter.
Literally,
You know what I
yes.
mean? And I imagine that's what happened to people who are trading. Which one of these has fucking more price history? What's going on here? The SPX. Is that going to show me?
If you
There
go
we go.
yeah, exactly.
Like this looks like a V bottom, right? But in reality, this is, months and months and months of sideways here, months and months and months and months of sideways. And I do think that a reasonable idea is, okay, we come back to this kind of floor and we probably chop the shit. The downtrend stops and the accumulation / chop before the next leg up and hopefully continuation of this giga trend,
Yeah, yeah.
you know?
Or the
At the end of the
alternative,
day,
of course, the Doomer case, right, where
well,
that your breakout level, all of our entire lives have been a deviation above that,
yeah.
and
Oh
then you're back
God.
inside
This
the
is the
range.
Putin drops the nuke chart, right? Like Putin drops the nuke and this is what happens. And then it doesn't even matter anymore.
At least
right?
we'll be
then
right.
It's just
Yeah.
survival of the fittest. It's not going to be about who draws order blocks anymore. It's going to be who's got the big club.
Ugh. Mayne, it's been great having you.
Yeah,
DonAlt or
real
not.
quick, I need
Go
your
on.
opinion.
Oh, God. Fine.
Rock Lee, autistic or no?
No, just a hard worker, I think. He
No,
seems
I
incredibly
disagree.
self-aware about how people judge him, how they perceive him in class, because he's got no ninjutsu and no natural ability.
But do you
He
not think
seems
that
socially clued in.
he's obsessive and he doesn't know his own limits? He's
No,
obsessive to like a point of autism and
nah,
craziness.
you look at Mike Guy, it just makes sense. And also his flirting with Sakura was like pretty it was like pretty well
You don't
socially
think that
put
was
together.
Bergie?
Well,
think that
listen,
was a little
who are you
autistic?
asking? I thought
guess-
it was fine. Maybe that's a bad sign.
Exactly. And he's got the round eyes. Why does Rock Lee have round eyes and no one else does?
He's built different,
What
as
was
we all learned.
Kishimoto telling us?
We'll figure it out once Boruto starts being relevant. Thank you for listening.
God.
If you made it thus far, go find and click on Trader Mayne stuff. I'll leave a link in the description. He's on TikTok as well, God help him. But he's trying to fight the good fight of Candlestick Make Boing. Please give me sponsors. So, we wish him well
Yes.
in that fight. And we'll have him back on now. Well, now that he's unveiled this whole system, I don't really get the point of having him back on. But maybe just to chat about non-market related stuff, because he's taught everything he can, clearly, all in
Maybe
one
we'll
go.
do a spaces.
Yeah, we'll do a Spaces.
Those are always fun.
It's a good time. But you got to keep people entertained. As always, for us as well, links, thank you to FTX for supporting the show and the newsletter and everything we do as far as content creation. Although we're not amazing at it, we do try to sort of stay with you, unlike a lot of other people who'll just drum up all the good stuff during the good stuff, and then when things turn bad, they disappear. Links in the description. There's the mobile app if you don't want to get liquidated. We know your old DGens are going to go to some of the other products. So before you do, please check out the sort of liquidation leverage trading guide we sort of wrote up there. All that good stuff available below. Thank you to Trader Mayne. As I said, if all this price action stuff resonates with you, he's got it all, and especially the most recent video on his channel where his editor went through the painstaking effort of separating the wheat from the chaff, and there is a lot of chaff if you've ever watched any of his live streams.
Oh my god, so much.
That's all from us. Have an excellent weekend. Happy trading, and if this 12-hour order block breaker specifically idea fails, then you know the entire system isn't credible and you shouldn't watch the rest or any of his videos.
You know where to find me, on a boat off the coast of Dubai.
It's all on the line. All right, thank you very much, everyone. Have an excellent weekend. Mayne, thank you again, and we'll chat soon.
Thanks, brother.